Circle's on-chain activity is growing as Tether's treasury holdings swell. Hey everyone, I'm Jenny Horne and this is Crypto Corner right here on Schwab Network. Joining us today is Jim Ferraioli, Director of Crypto Research and Strategy. Jim, welcome to Crypto Corner. Before we get to stablecoin, can you give us a quick thought on Bitcoin's drop below 100,000?
Hey, Jenny, thanks for having me on. Great to be here today. Yeah, so if you go back to October 10th, President Trump had ratcheted up his trade rhetoric against China ahead of that meeting that was scheduled in Asia. And we saw a big blowout in leverage in the crypto derivative space. Since then, we've seen about $1.5, $1.6 billion in net outflows out of spot ETFs. On top of that, Palantir reported earnings which missed expectations, and the stock traded down. Lately, crypto, Bitcoin has been very correlated with the AI momentum trade in equity. So any weakness in that side of the market is also going to weigh on sentiment in crypto. And so we had a big down market day. As you all know, Bitcoin is very volatile. It's about 3 times the volatility of the S&P 500. And so with the markets down, Bitcoin took a dive even more. In terms of where we go from here, we're now down about 20% from the highs. The broader macro environment is still supportive for Bitcoin. And while this correlation with equities could be a drag on down days for equities, I still feel it's a good market to be holding Bitcoin in.
Okay, and outside of that, stablecoin adoption has been a reoccurring theme for investors this year. JP Morgan says the battle between Circle and Tether has a new leader, even as Tether reports massive treasury holdings. So tell us a bit more on that.
Yeah, so if you take a step back and look at the stablecoin industry to begin with, this is an industry that started in the ZIRP era, the zero interest rate period. And back then, stablecoins were really just viewed as an on-ramp onto the cryptocurrency ecosystem. It was also a way to switch out of a volatile cryptocurrency such as Bitcoin into a less volatile, a stable cryptocurrency. As the ecosystem has matured and all these different protocols have grown, these stablecoin issuers have really seen their assets flow. And the biggest difference between now and back then is interest rates are much higher. So fundamentally, these are really attractive, scalable businesses. If you think of a stable coin, it's similar to a stock exchange where investors are going to seek the largest and most liquid exchange that can handle their volume and trading. And so it's going to benefit these largest 2 stablecoin issuers, Tether and Circle, as the leaders in this space. But what happened over the summer, you saw the Genius Act get passed. And what that did is it provided a regulatory framework for stablecoin issuers within the United States. And so with that clear regulatory framework, that green-lighted traditional financial institutions and investors who were maybe more wary of stepping into this area to adopting stablecoins. And so it doesn't surprise me that stablecoin is growing its share of that market versus Tether. Tether is really seen as an international stablecoin offering. They're headquartered in El Salvador. They do not offer rewards for holding their stablecoins. And in the past, there's been questions about their financial statements. They've never had a professional full audit from a big accounting firm. So that's kind of the reason that I think stablecoins will continue to shift towards Circle, which is a U.S. publicly traded company headquartered in New York City. On top of that, Circle also pays rewards to their holders. This was their way of growing their market share against Tether. At certain exchanges, if you hold Circle's USDC, you will receive a reward from that exchange in USDC that's similar to the interest that you would receive in banking products from a traditional financial institution. So again, it's another way to bootstrap your own user growth and capture that market share. So it doesn't surprise me that Circle is seeing more on-chain activity and more market share growth relative to Tether. And how's Tether going to respond to this? They've announced that they plan on issuing a U.S. Genius Act compliant stablecoin. So it's a competitive market. They see that Circle is gaining share, and they're responding accordingly.
Okay, and so another theme this year has been crypto miners pivoting business models to focus on AI, of course. So the latest is Iren. What is going on here?
Yeah, so this is a common theme we've seen over the past couple of years. If we take a step back earlier this year, CoreWeave, which is an AI data center, it went public. Up until 2022, that company was actually focused on mining Ether. If you think about the crypto mining industry, it's a very difficult industry to compete in. First, you have two major costs. It's your electricity and your mining equipment, which is for the most part semiconductors. So these are large data centers that over the past decade or so have shifted to areas and locations where there's low cost of energy. With the energy grid in the United States at capacity now, and AI data centers really eating the world, all these AI companies are looking for areas where they can get lower energy, lower cost of compute. And so Bitcoin miners are very conveniently located, operating data centers in these areas already. Aside from the demand for AI, on the mining side, every 4 years, the block reward for Bitcoin is reduced by 50%. Bitcoin is also famously volatile. So on top of CapEx that you have to continue to spend, energy costs, which are broadly rising, you have to be able to sell your Bitcoin at a profit to fund the new equipment so you can continue mining. And so what we've seen over time is smaller, less efficient miners may shut down operations or try to pivot. So it makes sense that some of these larger miners are trying to capitalize on this AI demand and either diversify or pivot their business models to potentially more stable demand from AI versus Bitcoin, which can be volatile.
I mean, absolutely. And I will even say that as far as AI is concerned, it's also been pretty volatile. But yes, I mean, relatively speaking, a bit more stable, especially considering the mass CapEx going towards that specific, space of the economy right now. But we so appreciate it. Really great insight and great conversation today, Jim Ferraioli. That's going to do it for Crypto Corner. Remember to subscribe to Schwab Network's YouTube channel to find all of our past episodes. I'm Jenny Horne. Thanks for watching.